One of the things we're going to talk about on this wonderful Sunday is how the S&P 500 has this major weekly topping pattern up here, and we hit our price target. Our target was 1420 in the very short term. Now, one of the things that I will caution investors who only know how to buy and try to hold, you have a very rude awakening around the corner. And once again, I'll just tell people, if you had your 401ks or whatnot, just remember, go get with your financial advisor and see what they got to say. I'd say it's time to start taking profits, as we've been saying that. Ever since the S&P stopped here, it's normal for such a massive run. 1340 is going to be the handle, but I can tell you the 20 week is down here, where we've got the majority of the earnings season in play, and you have Apple coming out. So this is what this is going to look like, MMTs, and this is where that lower level where we got this last bounce. So let's take a look at the lower end of this channel on the S&P to that top reversal. That was the last part of that bull top right there. Now, when you take a look at the reversal side, you definitely have a reversal, and the weekly is very good to understand. Now, when you were up here at 97% on 311, they kept it 97, 95, 94, 91%, all overbought extremely. Okay? That's when you learn how to sell into rallies. Now, having said that, a lot of what got this market year to date from calendar 2012 to such a bull run off of this bottom on the S&P is I'm going to blow this up for the MMT, and I'm just going to show this lower area. This was back in December. This is that first trading day right here. So let's just take this calendar 12 right there. The upside is limited and the downside is extremely big. Because when we start getting down here to 1300 or 1280 on this 50-week moving average, that's this pink line. That's a 50-week moving average, okay? That's where this run really took off in this weekly bar right here to the major topping area of resistances. So when we take a look at the overall part of this S&P, it's that 3-week resistance that we could not continue to go. And every bull rally, whether it's been stimulated by the Fed or whatever the case may be, is that the earnings season isn't too bad yet, and we have a couple more weeks left of that, probably 3 weeks left of that. So once again, in order to have a summer rally that would come, is the S&P, that 1340 handle is going to be your major area of support. If we break that 20 week, meaning that when we came down to the 10 week, 10 week is no longer support, and that's that blue line rising. And it's still rising a little bit. It's not like the S&P is, you know, this is at reversal weekly. This is the counter trend, and we're starting tomorrow off. So that's the S&P 500. The Dow is back above that 13,000 handle, and it too looks similar. And you can sign up for the special alert if you want them on these indexes. You're going to come down here. I've got a 10-week moving average. Once again, this is the narrow contraction on a weekly level up here. This is the breakout highs. This is the reversal. This is the counter trend. Until you can close back above the blue line, which is the 10-week moving average, there's going to be strong resistance right about there, which is also half of the SMF weekly trading bar. That's going to be resistance. That 20 week is rising, So, and we already bounced on it. This was that big reversal that we had right here in that weekly, and they came right back up here to the stop. That's the Dow. So all eyes are going to be on the 20-week moving average. The lower end of the support level on the Dow will remain at 12,500 should we come down and break this red line, which also is the 20-week moving average, and or we can stay in a trading range. However, I will tell everyone right now up front, your 3,000, and this is what the Nasdaq composite looks like. So here, let's take a look at how the Nasdaq composite, which is heavily loaded with Nasdaq technology stocks that have performed excellent, and that the rally that we had like this, you'd have to go back many years, 98, 87 area, and we get these big rallies, and then just like last year, the Nasdaq comp fell off a cliff. So here's that big counter trend with all-time highs. One of the things that I will tell people is price volatility. That means the upside bull volatility is increased on an intraday level, but the reversal bear volatility is back in the market. During this whole movement right here, it was just parabolically up. Now markets are doing what we said. First trading day of April, we said very clearly that today's ranges in price equities would increase substantially. That means that people that have been just sitting around watching it go up, well, when these reversals, and you're at the 10-week moving average. Now, unlike a bull, it starts and the 10-week goes up in value, and you stay above it, and the weekly moving averages have all been ascending in value. Now, on the way down, these are going to be a major area of support right there, right above that 2,900 handle, not to mention the what that 20-week is 2870 right here. Now, regular people, a lot of people were never involved in that great rally because they couldn't believe that it could go up after the 2011 big shakeout and the great moves to the downside that we were involved in. Is that during the summertime, semiconductors, technology, they got to come down. What we would be looking at is buying into the energy stocks that have been beaten down, some of the beaten down commodity stocks. Those are out of favor. They're dirt cheap. So sell tech, sell semis, and sell retail. Now, granted that this 10-week moving average is where they start. It doesn't qualify for a bear until you have 4 weeks below the blue line, meaning that you've got to stay below the 10-week moving average 4 consecutive weeks to say that another bear side would be setting up. Right now, what we have is an overbought bull that's pulling back within the price structures. I will also show the Nasdaq 100, which is an index, top 100 stocks in the Nasdaq, and you know, this Nasdaq 100, you can see the parabolic move right above here, and you can see that it's sitting on its 10-week moving average and it has support down here. Now, that means with tech selling off and semis that they would sell off, they have to come back. Remember, the bulls got the support levels on the way down. So here's a pit stop for the Nasdaq 100. And once again, it's at a critical mass support level. And notice that the last 3 weeks over here, these were very narrow range topping pattern weeks, where when we were breaking out, we had some pretty big up weeks in here. And the weekly reversals are not, a lot of selling hasn't hit the tape. Every bull rally, and we call it a bull rally, okay, because that's what it is. Now, every bull rally does have a reversal, and those are the key indexes. And I will tell you that when we went into the spring period, which we're in right now, generally we have what we call spring rally, summer rally, Christmas rally, and various different seasonalities that produce rallies. Okay. However, we were so bought, as we said, at 97%. I mean, that was more than to the extreme. 96, 95, 94, and all of these indexes, and even at 83, it's not nearly as overbought. So it's working that bull run overbought level off. And I can tell you that anything that gets that extremely overbought, you have to have these pullbacks. And so therefore, on all of these indexes, Dow Jones, Nasdaq 100, Composite S&P 500, are going to have even higher price volatility. So what happened is when this went up for the first 3 months in the bull, okay, with all the talk, and there's lots of mechanical things that happen in the exchange model to get it here. I will not go into detail on that right here in this particular segment. With MMTs, I already know why that this went up, but everybody just watched it go up, but they forgot price volatility has returned. Price volatility in indexes and equities will continue to even get higher intraday movements, meaning that what happens in a bull run is they go back up and hit resistances, but then they roll over, and they go back up and hit resistances, and then they roll over. That's the kind of trade that is going to be forward looking. Now, if you were a public figure and by of innocence that you got this move, just like we said last year at about the very same time, you can find it on the website. Last year was a little bit different because you see QE3 from the Fed and the worldwide liquidity and the Europe and all of the mess, that's coming back into play. And the whole movement was all based that global growth was going to increase. Well, it did, and this was one of the great performers in that Nasdaq. And most of this was driven, Apple Computer helped drive that Nasdaq comp and that Nasdaq composite up there. However, when I show you a weekly chart to show you how the Nasdaq composite and that Nasdaq 100, it too is coming to the 10-week moving average, and it tested it on Friday. But you can see the same kind of movement here, just as you did on the Nasdaq, as we got up here to the all-time high, then we shorted it down. So we use it as a barometer. It's hitting that 10-week bull pullback. But here is the main concern for people that are in Apple, that Apple really needs to come down here to the 200 or the 20-week moving average right above the 500 level. Of course, you're going to have various levels of support. I will tell you, though, that the trading ranges, so let's take a look at this. That's the 20-week moving average. These are all great weekly bull runs. Just look at how that bull run ran right up to the top, and Apple is about 16% weighted in this Nasdaq composite, in this Nasdaq 100. I believe it's about a 4% weighting, and I stand to be corrected. It's changing all the time to the S&P. And the bulls, the super bulls, were all happy that Apple wasn't driving this S&P down. We see otherwise. We see that these indexes have got to come down into the base patterns where they broke out. And at that point, if the bull is really going to be here, it'll be very clear and very evident at that time. What I would recommend to people that are just watching the video by pure innocence, and you came across it, is there's times to sell, and you have to know when to sell. The public doesn't know when to sell. So here's that Apple chart in reference to weekly Nasdaq composite. And what rolled this up was Apple's a lot of this Nasdaq composite, believe it or not, and the same thing with the Nasdaq 100. That's the update. Price volatility is here to stay. Price volatility will continue to rise in directional mathematical price movements, both to the bull side and to the bear reversal side. Now, when the earnings kind of, so a good correction down here would set up that summer rally that we would be looking at participating in leg 2. This is leg 1 of the calendar year. And remember, every index, I don't care what it is, Dow or any of them, Nasdaq composite, they all have calendar yearly 52-week highs, and sometimes you never see them again. Now the bear and bull sentiment is changing. We will be buying a lot of puts because we can ride this down here meaning that we could short this down to that 20 week using that Nasdaq 100 right here. And we would love for this Nasdaq 100, if Apple breaks below the 10 week, then this Nasdaq 100 goes right along with it. Once again, Super Bull is pulling back. Price ranges are going to stay elevated, and consolidations and bull shakeouts is what creates new buying opportunities. And the leading stocks, just remember, it's seasonality, that semis that ran it higher. So home builders and financials have to replace the tech and things like this. So I will conclude it, and we'll talk more about it, MMTs.